we think that Jito is the epicenter of a multi-sided network that keeps Solana operating at high performance. Jito is an integrated software system with multiple components that I'm sure we're going to get into later. But all of these components complement each other to provide something that is greater than the sum of its parts.
Hey everyone, welcome to the Level Up podcast, presented by the Medici Network, the exclusive community for financial institutions to engage with blockchain-native funds and founders. Our mission is to be the leading destination for institutional investors to level up their knowledge about liquid token markets and do serious diligence on publicly traded protocols. I'm your host, David Greider.
And I'm your host, Sean Farrell. Whether you're a fund hunting for alpha or a founder looking for best practices, you'll find the insights you need to understand liquid token protocols from an institutional investor's perspective.
Each episode, we bring together leading digital asset investors and top protocol founders to unpack the investment thesis behind each project's liquid token. We'll ask the hard questions about fundamentals like adoption, token economics, key risks, catalysts, and more.
Before we kick things off, make sure to hit the subscribe button and follow us on Twitter for the latest episodes.
And as always, a quick disclaimer before we start. This podcast is for informational purposes only, and nothing herein should be considered financial, legal, tax, or investment advice. The views expressed by our hosts and guests are their own and do not reflect those of the Medici Network, Fundstrat Global Advisors LLC, Finality CP Management LLC, or their respective affiliates. All listeners should consult their own professional advisors as to the legal, tax, financial, or other matters before making any investment decision. Although our guest this week is a managing partner of a registered investment advisor, nothing in this podcast should be considered an offer of Multicoin's investment advisory services or should otherwise be confused for investment, tax, legal, or other financial advice.
Now, let's get into it.
Hey everyone, welcome into Level Up. We have an exciting podcast on deck for you today. We're going to be talking about Jito, the MEV infrastructure, liquid staking and restaking protocol on Solana. We're going to be talking with founder of Jito Labs, Lucas Bruder, and co-founder and managing partner at Multicoin Capital, Tushar Jain.
Yeah, Sean, I'm really excited about this one. I think Jito really touches a lot of things within the Solana ecosystem. They're pretty critical infrastructure. For those more focused on Ethereum, you could kind of think about Jito as the, what would be considered the flash bots, plus the Lido, plus the EigenLayer, but for Solana. And, let's go through some of the token metrics and just talk a little bit about the token before we dive in. It's trading about $2.20 right now, about a 2 billion FDV. And the price has actually been pretty range bound relative to Bitcoin or just even some of the altcoins that have performed worse. It's really traded, between $2 and, high fours, sometimes getting into up to $5 range since its launch for the most of the period. And, but obviously strong support there and holder base. Here's what I consider to be the comps for Jito. We mentioned Jito touches those three buckets and they check those three boxes of MEV, LST, and restaking. And we'll talk, I'm sure, more about what MEV means when we get into the podcast. But we have Marinade, which is MSOL for the other liquid staking on Solana, SolLayer, which is the layer token, as the other comp on Solana for restaking. And I think they're doing something a little different than what Jito is doing on the restaking side with the way they're approaching it, but still comp. Then Lido on the Ethereum side, EigenLayer. And Jito's looks like they have the largest market cap on a fully diluted basis, and they're about the same size as Lido from a circulating basis.
Yeah, it's interesting. All of those different peers, are formidable businesses in and of themselves. So I'm curious to hear, the logic and the benefits of having them all under the same umbrella. I'm sure there are some flywheel effects to be had from that.
Yeah, I'm sure Luke is really thinking about it from that perspective, and I'd love to hear those thoughts. Here's the chart of just the performance relative to some of the other tokens that we mentioned just over time. And this is since 2024. And you can see they've held up better than others. And SolLayer has performed pretty well, but it really just launched, so it's in its kind of discovery phase. And this is year-to-date performance, with Jito down about 20% on the year, but better than some others, and not as good as a couple new returners here. Sean, what are we looking at here?
So I like to equate Jito to left tackle in football. So for those that are familiar with the sport, they say the best left tackles are the ones that you never hear about or never think about throughout the game because, no one gets by them. They don't cause a scene. That's kind of how Jito is for Solana. So back in January, following the launch of the Trump meme coin, the Jito software, I don't know the specifics around it, but it had a bug in it. It went down for a few minutes and needed to be patched up. But while Jito was offline, you really got to see and feel the positive impact that Jito has on Solana. So while Jito was down, the median fee skyrocketed. You could see that purple line, go parabolic there for a few minutes. And, you saw the transaction account, transactions weren't landing because this inclusion and ordering software that Jito provides was not available. So it's clearly very critical infrastructure for the chain.
Yeah, obviously very critical, and it underlies a lot of economic value. This is what you'd consider to be the real economic value of Solana. It's effectively the fees that are paid for using the network-based priority vote, and then the Jito tips, which is there in green, which are, what is paid to the validators that runs through the Jito protocol for either MEV or sometimes just to get included in the blocks. People will pay tips to validators, and it's become quite a large portion of the economic value in the network. I think it's maybe 40%. And Jito Labs, they take a cut on this, and so does the DAO, the token JTO DAO. And the Labs is getting, I don't know, maybe it's 3.4% of all fees on Solana. So it's very critically tied to the success of Solana as a protocol. And Sean, what's it like on the LST front?
On the LST front, Jito Sol is winning in terms of market share. They have about 40% market share. I do find it interesting that we haven't seen the winner take most type market structure take place like we have seen on Ethereum just yet. So I'm curious to hear from Lucas and Tushar if they do foresee the winner in liquid staking on Solana commanding 90% plus market share like Lido on ETH, and if they do, how they think Jito is going to win.
Yeah, and this chart here is the market share chart. Obviously, Jito's been pretty steady at just under 50 in holding their market share, as others have kind of floated around. I think this is pretty interesting, and from my perspective, this is the total amount of stake on Solana. And while they have about 40% market share of liquid staking tokens, which are, representative tokens of what's staked that you can use in DeFi, etc., of the total, most stake is still just natively staked. So a lot of room for a rising tide to lift all boats here when it comes to just greater penetration of liquid staking as a whole. I'm curious what they think the barriers have been and could be the adoption catalysts. And one more, this is restaking. This is the third product we mentioned. Restaking is similar to EigenLayer. They let you take your Jito or Jito Sol, which is your staked Jito LST. You can post that as collateral to support the consensus of another network, a node consensus network. NCNs is what they call it on their network. And that lets middleware applications use Solana security. And it's early days there, but up to 200 million of collateral restaked on Jito, and looks to be growing relatively fast.
Yeah, I'm very interested to hear Tushar's thoughts on its restaking. I know that him and Multicoin in general, and really the whole Solana community has kind of taken a more integrated approach to building out ecosystems as opposed to modular, whereas restaking certainly is in that modular bucket. So curious to see how that all fits together.
What are we looking at here, Sean?
Here we have top applications by fees and revenue. This is sourced from Artemis, and this excludes all layer 1 and layer 2 blockchains organized in descending order based on fees, latest 12 months. And you can see that Jito is second in fees and not quite second, but still produced $56 million in trailing 12-month revenue, giving them a price to fee multiple of 2.1x, which is, among the better multiples in this list. and a price to revenue multiple of 39.3x.
And I think, for our listeners, just to explain what fees are and revenue, the difference is generally fees are what's, the nomenclature in crypto is it's the top line that flows through. So this is the inflation, the tips, everything that flows through from into the Jito DAO from the LST as well. And then revenue, sometimes I actually think about that closer to profit just because that's kind of what's kept once you take out what's paid to the DAO and the validators. And it's 40 times. So it's pretty compelling in terms of value capture. I think one of the interesting things about Jito is just that they do have a lot more value flow through them. And this is a governance proposal that was recently put forward within the last month to think about how the community can return more of that value and be more value accreted to the JTO token. And I'm excited to talk about some of these proposals as we get into the podcast today as well.
Yeah, it's exciting that projects are genuinely thinking about accruing value to tokens. I think, now that we have a regulatory backdrop that is conducive for that, and clearly token holders are demanding some promise for future return of capital, and I find that to be great.
As a shameless plug, I did put forth a proposal, and I do encourage people to check that one out.
I would plug that as well. I don't think that's shameless. It was a great proposal.
And then here, just the final thing we'll talk through with the token supply. Obviously, they've gotten through their first big unlock. There's another unlock. That might just be community incentives, but curious to talk to Lucas about the supply dynamics and hear Tushar's thoughts on how he thinks about the supply dynamics as well.
Yeah, I think, the broad takeaway is that despite its formidable position within the Solana ecosystem, from a tokenomics perspective, its float is still around 30%, which I think a lot of liquid investors would perhaps have some trouble with that. But I'm sure that both Tushar and Lucas will have good frameworks with which to view that with.
I'm excited to hear their thoughts and just hear what they're thinking about in terms of the future outlook for Jito. Sean, anything else you're looking forward to?
Yeah, I'm certainly looking forward to understanding the high-level thesis, but also looking to drill down on some of the key growth catalysts and risks that investors should be aware of when they're investing in Jito.
All right. With that, let's get into the show.
Lucas, Tushar, welcome to Level Up. Happy to have you guys here today. I think we should maybe start with some quick backgrounds and discuss the high-level thesis behind Jito. Lucas, I would love for you to kick us off. Could you walk us through your background and why you built Jito?
Yeah, thanks for having me on. First off, my name's Lucas, co-founder and CEO at Jito Labs. I started Jito in 2021, been in the crypto space for a while, and before that I was doing robotics and firmware in San Francisco at a few startups, like self-driving construction equipment and LiDAR and things like that. And really just kind of nerded out about computers. And I think entered the crypto space 2017, 2021, discovered Solana and just fell in love. I think took a lot of my computer engineering background, and Anatoly and the founding team at Solana is very deep in the weeds on computers and engineering, and it felt like a very refreshing approach to blockchains and financial infrastructure compared to Ethereum and some of the other networks. So just fell down that rabbit hole and had done kind of dabbled in MEV before on Ethereum and kind of merged the two together to start Jito. So yeah, started Jito 2021, Tushar, Multicoin, some other investors from Solana Ventures and a few other spots came on board for the first round and really kicked it off there and grew it into what it is today.
Very nice. Now, Tushar, could you provide our viewers with a bit of your background?
Yeah, absolutely. Thanks for having me. Hi, everyone. My name is Tushar. I'm co-founder and managing partner at Multicoin Capital. We are an investment firm in the blockchain industry, managing a few $1 billion across public and private markets. We invest on the venture side. We also invest in public markets and liquid crypto tokens.
Tushar, you guys have been really long time supporters of Jito. Maybe could I just start with you from your perspective? How do you think about maybe the thesis around Jito and then kind of like its value within the Solana network at a high level?
Look, for context, we were the seed investors in Solana and we're early supporters of Solana. And we've been very involved in the Solana ecosystem ever since. And one thing that we have concluded is that Jito has become an essential component of Solana's economic machine. And we believe that Jito's systems are critical infrastructure for the transaction processing and block production across the Solana network. We believe that Jito has created a structural lock-in across stakers, validators, front ends, users, and other steps across the transaction supply chain. And we think that Jito is the epicenter of a multi-sided network that keeps Solana operating at high performance. Jito is an integrated software system with multiple components that I'm sure we're going to get into later. But all of these components complement each other to provide something that is greater than the sum of its parts.
I'm glad you mentioned that to the sum of the parts comment. I think the way I want to organize this conversation, at least the first part, is just to discuss all of those disparate parts and then bring it all together to discuss how they create network effects. So I think first we should start with the MEV infrastructure, which you briefly mentioned. I think something that would be interesting, we have some more sophisticated listeners that are listening to the pod, some less sophisticated, but I think both might disagree on what the definition of MEV is. So I'd love to Tushar, get your definition of MEV to frame the conversation.
I'm happy to take a shot at it. I think Lucas may be more qualified to opine on this than me, but I would say MEV is the revenue that the block proposer can earn from controlling the ordering and inclusion-exclusion of transactions.
Lucas, do you have any improvements to that definition or critiques?
I think it's pretty good. It's essentially the value that block producers can get by determining the sequencing of transactions. So to dive a step deeper as an example, it doesn't really matter. Like Tushar and I are trying to send you $5 or 5 SOL on Solana. The sequence that takes place doesn't really matter. Like if he goes before me, it doesn't really make that much of a difference. Well, let's look at a different example, like an arbitrage. So there's some price imbalance between Raydium and Orca, some other DEX on Solana, and Tushar and I are both trying to close that arbitrage. The sequence that takes place, it matters. So if I get there first, then I'll win the trade. If he gets there first, he'll win the trade. Typically, only one person can win the trade. So that's kind of where the MEV side comes into play, more on like arbitrage, liquidations. Meme coins are very popular in Solana. And there's a bunch of other trading activity that takes place where the sequencing matters. And so people are willing to pay more to get there first, essentially.
Yeah. If I can add something to that, I know a lot of the listeners here might have a background in traditional finance or, capital markets done the old school way. And there we have this concept of high frequency trading firms. Who are the ones who win these types of arbitrages. And the way they win is by being first. And so the current system prioritizes being fast. It prioritizes calculating things fast, and it says the best way to order things is first in, first out. Blockchains do not do that. They explicitly say the best way to order things is not first in, first out. It's who's willing to pay the most. I think both of these are very valid approaches. And the question then becomes, which one of those two models leads to who making how much money, right? In the HFT model, it's basically most of the money is made by the people who can be the fastest, which is why you see high frequency trading shops investing in microwave towers to shave a couple of milliseconds off latency by bouncing a message off the ionosphere instead of sending it through a fiber optic cable, which might be just like infinitesimally slower. All right. And you have incredible amounts of investment in ASICs and all the stuff that these HFT firms do. And the fastest ones make a tremendous amount of money. Well, when we look at blockchains, I actually think what we're going to see is the democratization of those trading profits. Because what happens is who wins those trades is who's willing to pay the stakers, the validators, and by proxy, the stakers of the network, the most in order to win the trade. And so by that means, what ends up happening is all of those HFT profits end up being distributed out to the stakers of that layer one protocol. And this is actually a core component of how I value layer one protocols generally, is I look at it as the discounted cash flow value of all of the MEV that is going to be earned on that network, because that will flow through to the people who stake the token.
That makes a lot of sense. And so maybe back to Lucas, could you perhaps walk us through from a high level the transaction supply chain on Solana before Jito and after Jito, and what Jito actually does to address whatever issue there was with MEV prior to Jito existing?
Yeah, so we started 2021, launched the Jito Solana Validator client at the end of 2022 and the Jito block engine. And these are essentially a out-of-protocol auction mechanism to kind of bring some order to the chaos on Solana. So at the time, the scheduler, essentially the thing sequencing the transactions was essentially random. And so what ended up happening is you'd have people spamming a ton of transactions to get in. And this created a lot of failed transactions. It was taking a heavy load on the validator, because the thought in my mind as a trader is, if I can send my transaction 10 times or 100 times, if that increases my probability of landing and making money, then I'm going to do that. And so you had people just spamming these trades. And so we added essentially a more efficient route. So the Jito block engine was a way to kind of filter through all this stuff outside of the validator client. So our software will filter through all these trades and transactions that are coming in. So whether it's trading meme coins or arbitrage or just general trading, and try to find the ones that pay the most. And the block engine would then forward those to the validator. So then the validator is essentially getting a very high quality stream of high paying transactions. And so that's kind of the shift from before in 2022 and early 2023, as we're kind of bootstrapping this two-sided marketplace to where it is today. There's essentially more efficient routes to land transactions on chain. So the people that are trading are happier because they just send something once, they pay, and they know it's going to go in. And then the validators are happier because they make more money. So Jito is contributing roughly 50% to the economic value on the network. And then the users are happier too because the blockchain runs more efficiently.
Lucas, you mentioned Jito is contributing 50% of the economic value with MEV now. Could you maybe talk about some of the KPIs for Solana MEV as a whole, and then for you guys as it relates to that product set?
Yeah. So back to what Tushar said earlier, the REV is very important. Blockworks talks about REV a lot. So that's a combination of in-protocol and out-of-protocol tips that go to validators and stakers. Essentially, how much are people willing to pay to use the chain to send transactions? So that's something we think a lot about. There's other metrics that we care a lot about too. Like, we don't want to slow down the network. So there's like the throughput and how many like transactions there are per block, and some other metrics that are kind of track the user experience. So yeah, I would say the main one that I think about is the REV. So that's priority fees and tips. And yeah, today Jito's roughly 50% of REV. And that's using, I checked earlier today, we were doing around like a little less than 25% of the block on average for the past like day. So we're doing essentially 25% of all the compute units is generating 50% of value for the network.
And, before the call, we were actually talking about something really interesting when Solana, there was some downtime with Jito and with the impact that had. I mean, I'll open up to both of you perspective. What was that like?
I can talk from the inside and then Tushar can talk from the outside because we were just it was all hands on deck. So yeah, there's a Trump meme coin launch in mid-January and we just started getting a ton of traffic when the president, or I guess incoming president of the United States, launched a meme coin on the network. Things get a little crazy. So we ultimately ended up having an outage that lasted like an hour or two. And while we were fixing and like fighting those fires, people essentially had to send transactions through the normal kind of scheduler and normal way. And during that time, the median priority fee jumped 5,000 times and the transaction count fell by like 66% or so. And the compute units blocks essentially were half full. So yeah, I think this shows that our software helps take a lot of load off the network. There was a lot of trading during that time and a lot of money to be made. And people were not only abusing our system, but abusing the network. And when our system's working properly, we essentially eat all that load through the software that we've been developing for a few years that's been stress tested over and over. And we essentially take that load off the network and off the validators. So the validators can just focus on finding the high priority transactions and sending the good quality stream, and then send that to the validator and they can operate more efficiently.
Yeah, to just add to that and maybe try to summarize some of that a little bit, I'd say the existence of a block space auction run by someone like Jito has positive externalities for users through protection for reverted transactions. You don't want to have to pay a fee for a transaction that doesn't actually land, but also, and I think more importantly, has positive externalities for the network itself because it creates two separate lanes for transactions. You have the competitive transactions that go through the Jito lane, and they're going through the auction process, and you decide which one should actually make it to the validator. And then you have the non-competitive transactions that go through the regular lane. These things are not competitive, they're not conflicting with each other, so they can get included in kind of a standard way. And by segmenting these two lanes, we get better block construction. We get more profitable blocks. We get more transactions successfully landing in a block. And we actually lower the median fee. Even though we're increasing total revenue, the median fee goes down because you don't have these two sets of people, the competitive transactions and the regular transactions, competing with each other in the same lane.
We have a good feel for the MEV infrastructure side of the house. I think we could probably move on to brief everyone on the second vertical that Jito offers, which is liquid staking. So I think we can kind of assume that everyone listening has a good feel for the purpose and the demand for liquid staking. So maybe we just start out by getting a feel for the market structure. So liquid staking on Solana is something like 12%, while ETH is closer to 30% of total staking. I'll pass this question to Lucas first. Tushar, if you have something to add from an investor perspective, would love to know. But why do you think that ratio is the way it is, and what has to happen for the LST market on Solana to expand?
The total stake rate on Solana is much higher than Ethereum. I think it's around 60 to 70% last time I checked. And of that 60, 70%, roughly 11 or 12% of that is in liquid staking tokens. So there's still a huge essentially 90% of the market that left to expand to. So there's a huge opportunity here. And yeah, we've been slowly grinding on getting more and more liquid staking. I think a lot of it, there's a few reasons why it's not the same as Ethereum. So I think one is there's an education component to it for sure. Like, why would you liquid stake over normal staking? You get to have your cake and eat it too. So you get the staking yield, you get the liquidity, you can get in and out of it super fast. JitoSoul is very deep as far as liquidity goes. I think it's like 4 or 5 times deeper than the next largest liquid staking token on Solana. The other thing that we think a lot about is, I guess, 2 things, and this is more from the institutional angle, and maybe Tushar can touch on this. One is, where is all the Solana held, and who is it held by, and how would they onboard to JitoSoul? So for the registered investment advisors, they have to hold in a qualified custodian. So how do they actually get the JitoSoul into their wallet is a big question. So making that easier. And the second one is taxes. So how do we get the tax laws in the US to more clarity there? Because you can talk to different tax advisors, I think, depending on where you are on the risk curve, and you can get legal opinions on this. But some people, I would say that the incorrect consensus, in my opinion, is that when you convert SOL to JitoSoul, or when you convert SOL to any liquid staking token and you mint JitoSoul, that would be a taxable event. I think that's wrong, because it's essentially just Solana that's wrapped. So that's something we think a lot about too, is like, getting clarity on that to essentially say it's not taxable. So then these people with cost basis under $1 or very low cost basis for SOL don't have to worry about that potentially taxable event. And yeah, that's something that we do internally, is that we don't treat that as taxable.
Yeah, that's an interesting tidbit. Tushar, do you have anything to add there?
Yeah, going back to the original question of why is liquid staking on Solana have less market share of total token staked than on Ethereum? I think the key is Ethereum had a quirk of history that led to this higher liquid staking participation, which is for a period of, I think, like 2 years, there was no way to unstake your ETH. This was leading up to the merge. They had the Beacon chain live, and you could stake your ETH, but you couldn't unstake it. And so when you have an indefinite unstaking period, you don't know when the transition to proof of stake is going to happen. It is really valuable to use a liquid staking protocol, because that gives you some optionality, whereas otherwise you may not have any. On Solana, the unstaking period is 1 epoch, roughly 2.5 days. And it is always 2.5 days. That's the most that you're going to have to wait. It's deterministic. There's no variables on staking queue or anything like that. And so the additional liquidity that liquid staking tokens provide is less valuable in that version of the world than it is in the version of the world where it's you can only stake and you can't even unstake for 2 years. So I think Ethereum was pretty path dependent to get to this point. I think that liquid staking market share on Solana will increase as people actually see the staked SOL as an asset that can be used, not just held, whether it's used as collateral in DeFi or used in trading strategies, etc. I think people will start seeing this as an asset that can be used. We do need to mature the DeFi ecosystem more. And I think liquid staking tokens will be a huge beneficiary of that. Right now, when you just native stake SOL, it just kind of sits there. It's not engaging in much productive economic activity, whereas liquid stake tokens can participate.
I have a follow-up on this. Lucas, you guys created StakeNet. Could you tell us quickly what that is and then why it's important and how it's being used?
Yeah, StakeNet is a protocol that runs you can think of it like the brains behind JitoSol. So this protocol, a stake pool, people can deposit SOL into it, and it is responsible for delegating that SOL out to some number of validators in the validator set. And so before, the way that people do it is you essentially have a team that's kind of running this and managing this validator set. And we wanted to create something that was decentralized, that no team was kind of in control of. You couldn't have like friends or, validators messaging you, saying, hey, send this to me. It's ultra transparent. And essentially, StakeNet was born from this kind of need of wanting to create the most transparent and the most decentralized stake pool. So StakeNet, essentially, it is the brain behind JitoSol. It monitors validators and it stores the validator performance on chain of every validator. So you can go on Solana and say, hey, Jito1 or Coinbase, this is their vote credits for the last 2 years, which is a major contributor to APY. Here's their commission. Here is their version that they were running. All this information on validators is stored on chain. And then the other component of StakeNet, it has several parameters that are controlled by the Jito DAO. And it essentially looks at this data and decides how to delegate stake. So if validator goes offline for a day, that impacts the yield. And so StakeNet will say, okay, we're going to take stake off that validator and move it to someone that's higher performing. Or, this validator increased their commission from 2% to 80%. So that means less earnings for the JitoSol stake pool. So it's going to pull that stake off and move it to a validator that earns more. And so this is all happening on Solana. It's permissionless, fully decentralized, and transparent.
And so just to contrast that with some competitors, or say perhaps Lido, who is the market leader on ETH, they don't have anything like this. It's more manual.
So it's more manual, or there's a permission validator set, and essentially what it is a team's running a server and they're just delegating stake manually using a hot wallet, which is a pretty big security issue if you have a hot wallet that's controlling millions of SOL.
So we talked about the LST market. Now I want to chat a bit about Jito's market share. Right now, Jito has about 40% market share. First question, Lucas, do you foresee LSTs on Solana being a winner-take-most market like on ETH? Lido has, I think, 90% market share. And how does Jito plan to outcompete its peers to achieve that 90% market share?
Yeah, I think these are winner-take-most market. There will probably be one or two in the clear lead. The thing that we think a lot about, and I don't know if you'll have this chart in the follow-up or not, but there's a chart online on Dune that is showing Solana liquid staking tokens. Jito has 40% market share. I think the next closest one is 20-ish. We think a lot about the network effects of the LST, and I think TVL is a network effect from the lendiness standpoint. People trust protocols that have a lot of value in them that haven't had any issues, and that's valuable. But at the same time, every LST on Solana is running the same code. There was a stake pool program that Solana developed that has been audited 9 times by 5 parties, super secure. And so from that standpoint, they're all the same security. The thing we think a lot about are the true network effects, and I think liquidity is one of them. So thinking about how do you have very deep liquidity, and then also the integrations as well. So making it so that you can go anywhere in Solana DeFi and use JitoSol, and that's not necessarily the case for other LSTs.
That's great. And moving on just to the next product set that you have, and the newest product set, talk about restaking. And I think I've heard you say this, a lot of people say this. Jito's like Flashbot plus Lido, and this is the eigenlayer of ETH part. Can you maybe tell us a little bit about your restaking product just to kick it off first?
So yeah, the Jito restaking is a multi-asset restaking protocol for consensus networks on Solana. So I'll kind of break that down. Multi-asset, you can use any SPL token in Jito restaking. So Jito Sol and JTO are two of the assets. There's a few other LSTs. If someone wants to go and create a DePIN network and wants to leverage the frameworks that we built to use that in their DePIN network, they can launch that with their own SPL token. So DePIN, if there's like DeFi and automation, things like that, you can use your own token. You can also use LSTs. And the consensus network part, you can essentially think of this like any oracle or any information that you need multiple parties agreeing on is something that you can use the Jito restaking for. And that's kind of why we built it in the first place. It's not like, hey, this is something that's like pretty cool on Ethereum, let's just build it on Solana. It's like we have this system that distributes tips, and it's distributed over $1 billion in tips. And we need to decentralize the system. How do we actually do that? And so that's kind of where we started thinking about restaking. And yeah, today it's the largest restaking protocol in Solana, has over $200 million of TVL, mostly LSTs. 96% of the LSTs in Jito restaking are Jito Sol. We have the first, what we call node consensus network, which is essentially a set of operators on Solana. So this is like Helios, Triton, Temporal, a few others that are running software that help distribute Jito tips on Solana. And there's a few others that are in the pipeline as well that are kind of more in the DePIN and DeFi space.
Tushar, this is for you. You know, at Finality, we kind of have this view that networks, whether that's Ethereum or Solana or others, you know, restaking is kind of a core primitive that you need because, you know, great apps need middleware, and restaking really enables that in a decentralized way. From your perspective as an early Solana investor in the modular thesis, how does restaking fit within the modular thesis and Jito within that? And how important is it from your view?
Look, I'll take the contrarian view here, and this is something that I think Lucas and I have a slightly different perspective on. I think that the middleware can be very valuable. However, I'm unsure as to like the revenue potential for it. I think it delivers a lot of utility to decentralize some of these middleware components. I don't know how much revenue it delivers. I hope I'm wrong. I would love to see tremendous amounts of revenue flowing through to restaking. But for example, when we recently published our valuation report on Jito, we did a sum of the parts valuation, and we didn't include the restaking portion of it. We see that as a call option. You know, maybe it turns into something, but I don't know how much apps are willing to pay for that middleware.
Yeah, I guess that's fair. And I think this kind of leads into the next question, just the final question on this topic, which is, Lucas, you know, how do you think about the KPIs for restaking? Is it, for you at the end of the day, is it revenue that flows through? Is it TVL? Is it NCNs? Like what are the right KPIs?
I would say revenue is the big one. And I would say that I want to see 5 to 10 extremely high quality teams building on this. If they use Jito Sol, that's great because that is very sticky for Jito Sol. And with the restaking program, it essentially has the LRT component built into the protocol. So you have all these assets that are deposited into restaking that are being wrapped like LSTs that then are earning yield, and they can go into DeFi. So they can go into Drift and Camino and Orca and all these other places on Solana. So I would say protocols, revenue, TVL. But yeah, I think those are the top ones. And yeah, I think today, when we think of restaking on Solana, we kind of think of like the L2s and things like that, but there's a lot of applications that can use restaking on Solana that just actually stay on Solana. So oracles are a big one. like Switchboard is going to use Jito restaking to secure their Oracle. There's Deepin projects that are exploring it as well. They don't really need an L1, but they have some Oracle type component of it where they need to get this information that's off chain onto Solana. And so we're not thinking about it from like the L2s and the bridges and things like that. Those things, maybe they'll come to Solana, but we're thinking more of it like, how do we create this framework and software that people can use to bring more assets and applications onto Solana? And yeah, I think today I have a chart pulled up. I think we'll publish this soon, but yeah, today the tip router, which is Jito's NCN, is roughly 75% of the DAO's revenues coming from tip router, which is running on Jito restaking. So it's definitely delivering a lot of use and revenue for the Jito DAO.
So now I think we have a pretty good understanding of all three verticals. And to me, they all sound like they could be independent businesses, but I'm sure, Lucas, you have a thesis behind why they're all under the Jito umbrella. Presumably there are some network effects. So could you please brief us on the elements of each element of the network that improve upon each other?
The first one that's very strong is the Jito Soul staking and the validator client. So while one of the requirements to receive delegation from the Jito Soul stake pool is that you're running the Jito Solana validator client. And so as the Jito Soul and the stake pool grew, that was big carrot for validators. They're like, hey, there's a bunch of Soul available for delegation to my validator. I can make more money if I switch to this Jito Solana validator client. And so that really helped bootstrap the network effects of the validator client in the block engine. And that was very instrumental in getting the success, kind of getting the thing kickstarted when there wasn't that much activity on Solana in 2023 when we were kind of building out this network effect. I think the end of 2023, the validator client had like roughly 50% of stake, and today it's at 90%. So that was very helpful in getting that kickstarted. And then, yeah, I would say that both of those play together well with the restaking component too, and that there's more tips flowing through the system as more validators are running the software. And so for tip router specifically, we are able to essentially send more fees and more revenue to the DAO because that validator client is producing a lot of blocks, which has more tips in it. And so, yeah, there's definitely a lot of thought that kind of goes into thinking about this flywheel. But I would say that in general, there's a lot of Solana protocols that do this where I think Solana founders are just built different and they're pretty hungry compared to counterparts from other ecosystems, and that you can look at a lot of the top Solana DeFi apps and they have multiple verticals because they want to build products that people want, and they want to build very strong network effects in their apps.
Great. And maybe we'll move to some of the economics and the economic flows within the Jito ecosystem. Maybe I'll just start with Tushar. How do you think about the economics of Jito?
I think about the economics of Jito as a function of the economics of Solana. And I think Jito is this core essential piece of Solana infrastructure for all the various reasons that we discussed, whether it's the transaction pipeline stuff that the Jito block auction dramatically improves, or it's this virtuous cycle between the liquid staking and the additional yield from restaking, and then leading to more adoption of the Jito Solana client. All of these things lead to Jito having some structural lock-in in the Solana ecosystem. And they lead to me thinking of Jito as a function of Solana. Look, the reality is if Solana is not successful, it's hard to see a world that Jito is extremely successful. Maybe, Lucas has a rabbit that he can pull out of his hat. I don't know. But, we're both betting big that Solana is going to be successful and is going to be the dominant L1. And what I think about is, okay, well, what percentage of that revenue that Solana earns will flow through Jito? And what kind of margins are fair and sustainable for Jito to earn for all of the value they provide in the transaction processing pipeline and the staking and restaking aspects of their business? Like I mentioned at the beginning of this podcast, I view Jito as kind of a sum of the parts valuation, but I think that the whole is worth more than the sum of its parts because of the reinforcing nature of some of these business lines. But to just get into my valuation kind of methodology and framework, and I want to caveat this by saying, I want people to put in their own variables and their own assumptions. What I really want to talk about is the framework, not necessarily the variables that input into it. And so I think that there's two major components in the sum of the parts valuation. Part one is what percentage of Solana REV is made up of Jito tips. Right now, that's about half. And then what percentage of those tips flow to the Jito DAO? And there was recently a Jito governance proposal which turned on, or at least contemplated turning on, that fee collection for the Jito DAO. And then the second component is Jito Sol as a percentage of stake Sol, and then multiply that by the yield and the management fee earned by the Jito DAO for operating Jito Sol. And I think both of those should be Sol denominated calculations. I think you want to back out the USD volatility out of such a calculation because that is something that's exogenous to what Jito does and can control. So I really view my valuation and the economic value of Jito as a function of the value of Solana. And we recently published a report on the Multicoin website, diving deep into some various scenarios and diving into some calculations using this valuation framework.
All right. That's really good to know. And Lucas, is there anything else you would maybe add on the token kind of value accrual model? Right now, just thinking about it, some of the money goes into the DAO. Is that kind of the way it flows now? And there's some proposals that have been put forth for thinking about how that could change. Is there anything you want to maybe comment on there?
I think that's the right way to think about it. That fee switch was activated in, I think it was like early February. So yeah, last week, roughly 75% of the DAO's revenues from that fee switch from the Jito tips. So there's essentially, to go into numbers real quick, the 3% of Jito tips flow to essentially the protocol, and 0.15% of that goes to JTO restakers, 0.15 of that goes to the LST restakers, and then 2.7% goes to the DAO. And then there's the 4% management fee that Tushar mentioned as well. And yeah, I think large percentage of fees are from TipRouter, and there's a post on the governance forum that you mentioned that was written from a contributor at the Jito Foundation, Andrew, which kind of talked about what to do with that revenue that Jito's generating. So there's 2.7% that's going to the DAO. I think in the past, curious to get like Tushar, your input on this. I think people don't necessarily think that they don't really treat that revenue going to the DAO as like theirs, or like the token holders don't really think about it. It's kind of just going into this like black box and just kind of sits there. And I think there's a lot of creative things that can be done, whether it's with that 2.7%. So there's a ton of discussion in the forum. It goes from like the buybacks to buyback and burn to kind of redistribute to other. Maybe you can take some of the tips and send it to Jito Soul stakers to increase the yield. Maybe that will increase that Jito Soul market share more. You can reinvest it in other ways in the protocol. So it's kind of an open discussion at this point. I think I would hope that people are taking a multi-year time horizon on this and not just doing things, just looking at it from the short term. I think kind of to balance the two.
100% agreed on that. Look, I think there's a very clear hierarchy of how you should use the assets at a DAO or a company or any sort of economically motivated organization. And it's first, you should reinvest in growth if you have opportunities to reinvest into. It's critically important that you actually understand what is the return on invested capital if you are investing back into growth. There's too much thinking about in startups in Silicon Valley and in tech world of you should always reinvest. You should never return capital because that's a sign of not having enough opportunities to invest. And, it seems a sign of weakness. And I think that is just categorically wrong. And it is a really big example of a principal agent problem. I think you need to look at what is the return on reinvested capital. If that return on reinvested capital is above some hurdle rate, then you should reinvest that capital. And some of the ideas that Lucas mentioned, things like using some of the DAO treasury to then increase the yield of Jito Soul in order to attract more stakers, I think have a potential to be high enough return on invested capital to be worthwhile for the Jito DAO to do. But then the next level after doing these productive reinvestments is to find the most efficient way to return that capital to your stakeholders so they can then go reinvest it. Because that's what they're going to do. The capital doesn't sit idle once you distribute it out or you do a buyback. That went somewhere and they reinvested that capital. And I think the kind of standard buy and burn model that a lot of protocols have in crypto is it's overly simplistic. And it's kind of pro-cyclical in that they're using, at the top of the market cycle, they have a ton of revenue, and then they use that revenue to buy the token at the highest prices. And then when it's a bear market, you see a lot less revenue and the token price is way down. And so they're buying a lot less. So really, they're doing the opposite of the classic investing adage of buy low, sell high. They're actually buying high and not buying low. And that's quite honestly just dumb. And so what I think would be a much more efficient thing, and what I hope Jito will end up adopting, is doing a buyback based on revenue multiple. And so you set some sort of revenue multiple, you say, below, just for the sake of example, 20x revenue multiple, we will use our treasury to buy and burn JTO, and above 20x we won't. And the further below 20x we go, the more aggressive we'll be, right? So at 20x, maybe we use 1% of the treasury per day. And at 10x, maybe we use 10% of the treasury per day in order to buy as much as possible when the multiple is the lowest, and thereby deliver the most anti-dilution benefits to the token holders. So I do think that there's a lot of room here for reinvestment in Jito DAO, but I also think that Jito is going to be really intelligent about how to return capital to token holders if and when the DAO decides to do that. And I don't think that Jito will do the very simple and pro-cyclical thing of buy tokens at the top of the market and then not buy them at the bottom.
Yeah, that's a great point. I agree with your hierarchy in the valuation thing. Actually, I put in the forum that the valuation multiple approach, that was my proposal on the forum. I would just add, I think a useful way to also do it would be to look at it in two contexts, right? At least that was the proposal, was to look at it both on a USD revenue basis, half, and I thought you should always also look at it on a SOL percentage cap basis if you're thinking about multiples, because what's going to happen with the capital that you keep relative to what you buy back, you could be worse off if SOL goes down a lot. So I think it's good to look at it from both of those lenses, but I would agree with you on that point.
That's a great idea. I do like looking at it split in both SOL multiple and USD multiple terms.
Great. Well, excited to see what happens on that front. I think we should move on to chat a bit about governance and decision making, which I guess is still topical to what we were just talking about. Lucas, could you maybe define for us the different roles ascribed to the foundation, labs, and the DAO?
Yeah. So I'll start with labs. Labs is, you can essentially think of it like the technology development company. So engineers, front end engineers, back end protocol, all that stuff happens at labs. The foundation is responsible for stewarding the network, so growing the network effects, really thinking hard about where should Jito go, maybe thinking of some strategic things as well. And then they're also the kind of the boots on the ground. So let's say you want to do a deal with some off-chain party. So trying to think of one like, I don't know, you want to do marketing for something. You can't really go to a DAO and do that. Like, who's going to sign the paperwork for that? How's the money going to get there? So foundation is kind of this real world entity that can sign legal agreements and things like that that will help advance the protocol. And then there's the DAO, which is the token holders and the delegates, and they kind of make some of the decisions for the assets that are held by the DAO. So that would be like, what should the Jito SOL management fee be? What should happen to the 2.7% from tip router? What should happen to the revenue that's collected in the DAO? Things like that. So yeah, there's kind of these three parties that work together to help advance the protocol from engineering, business, and reinvesting in the growth of it.
One last question I had on governance as it pertains to decisions around, transaction processing and block production, the area that Jito Labs is concerned with. Can the DAO vote on issues related to that service?
It can control some of the fees and things like that, but as far as like feature development, things like that, today, no. But it's definitely something we're thinking a lot about. And how do we turn Jito from more of a service to a platform or a protocol? So I think that's something that we think a lot about, and how does that transition take place? And so yeah, I think thinking hard about that and hoping to see some more progress there pretty soon.
Can we actually talk about the token supply a little bit? Could you give me a sense, Lucas, how should we think about the breakdown of the supply and then like the issuance?
Yeah, so there's a Jito tokenomics post that was released before the Jito token airdropped, and there's kind of the traditional buckets. Very simple way of thinking about the tokenomics. You have the core team, which is the original kind of engineers and people that helped build the protocol. There's the investors, which were brought on very early on and helped essentially fund the development of the protocol. And then you have the foundation and the DAO. And so, yeah, there's essentially four very simple buckets. A large, I think 34 to 35% went to the DAO. From that, 10% was the airdrop. So I think the DAO is like 24% of the supply. I think the foundation's like 20-ish or so. And yeah, most of the issuance comes from the incentives on incentivizing network effects. So Jito restaking, it's the first profitable restaking protocol that's actually distributing real yield. None of the yield from Jito restaking comes from issuance. Most of the issuance is on network effects. So how do you get Jito SOL to be the preferred LST and the preferred way of staking on Solana? How do you get deep liquidity? How do you incentivize like people to borrow and lend and things like that? So yeah, most of the issuance goes there. from the DAO, and there's a proposal every year to essentially distribute, set the budget for the year. And there will be dashboard. There's a lot of dashboards internally. The Jito Foundation has a data scientist that actually goes through and like very carefully looks at where the JTO incentives are going and what is the return on that versus some other protocols that are just kind of like spraying and praying, and they don't know where it's going. They don't know what's going on and what network effects they're getting, where the foundation has a data scientist that is running analytics and tracking these things very closely. And so the DAO and the liquidity mining incentives are very efficiently run compared to a lot of protocols.
One point of clarification that I want to throw in here is there is a fixed cap on the number of JTO tokens that exist. And so when Lucas is saying the word distribution or saying the word issuance, I, as an investor, interpret that as distribution, not inflation, because from the investor perspective, I look at all of these things based on fully diluted value. I don't look at the circulating market cap as being particularly useful, other than to determine what percentage of the tokens are floating. I like to see higher percentages floating. If you have less than 10% floating, like that tells me the market price isn't really real. I believe Jito has about a third of the total tokens floating right now. And that's a pretty healthy percentage of the tokens floating, especially given how much of the not floating amount is held by the DAO or the foundation to invest in growth. From the investor perspective, look at fully diluted valuation. That is the most intellectually honest way to look at it. And I think that's where you should base all your multiples and everything off of.
Yeah, circulating market cap was a weird lie that this industry convinced itself was a thing for a very long time, but I'm glad we're moving beyond that. So I think it'd be great, while we still have time, to discuss some risk factors. I think it'd be great first to get the investor perspective, Tushar. When evaluating Jito, obviously we've talked a lot about the potential upside, but what do you view as the biggest risk factors to Jito?
I think there are a handful of risks. The first risk that I could imagine is some sort of alternative ordering rule within the Solana validator client that reduces the need for an external block auction. I know to people who aren't thinking about this stuff 24/7, that might sound like a bunch of complicated technical mumbo jumbo, but basically, like, the way the system works right now is you need this segmented block auction. If you remember what I was talking about earlier about having two separate lanes, regular transactions and contested transactions. And there is some potential that in the future, we see some sort of breakthrough that leads to merging those lanes and delivering equivalent performance. Is that particularly likely? I don't know. I'm not as qualified to opine on that as Lucas and some of the Solana core engineers. But from the investor perspective, I do like to note that as a risk. I also could imagine a risk from alternative market structures for transaction fulfillment or matching. For example, if more transaction matching happens off-chain through things like order flow auctions, then that reduces the total amount of MEV available at the L1, and then that reduces the total market opportunity for infrastructure like Jito. So if we see a lot of off-chain matching, on-chain settlement, I think that is a significant risk factor here. Now, I don't know that that's a likely risk. I think on-chain matching is superior from a price perspective to off-chain matching. And the reason for that is off-chain matching is not going to be permissionless and global. It's typically contracted with a single liquidity provider, where on-chain matching is permissionless and global, so it should deliver better price for the end user. But some of the front ends that people transact through don't actually care right now about giving their users the best price. They, try to extract as much as possible. They're not thinking long term. And so if that ends up becoming a larger portion of market share of order flow, then that is a risk to the total market for the L1 and for infrastructure like Jito. Then one other risk that people seem to be worried about is FireDancer. I don't really agree with this risk. I think FireDancer is a positive for Jito. I don't actually view it as a risk. People think that FireDancer's adoption could shift some dynamics in the ecosystem or reducing the need for Jito. I do not think that's the case. And, I'll stop after this to let Lucas chime in on this question. But one, I don't think FireDancer obliviates the need for two separate lanes for competitive transactions and non-competitive transactions. I think the positive externalities of that segmentation continue to exist even with a higher performance validator client, because I think we're just going to have way more demand for transactions as we look at the future. And then second, I expect there to be an integration of FireDancer with the Jito block builder. I think that these two things will work together. I don't expect FireDancer to be competitive with Jito. I expect FireDancer to be competitive with Agave.
Yeah, I think all those things are fair points and something we think a lot about those things a lot. FireDancer added support for Jito. It's on mainnet today. So from that standpoint, I think it's very complementary. And yeah, we think about the market dynamics and market structure on Solana a lot, and we don't just want to build on Solana, we want to make it better than what it could be if we weren't here. And so how do we keep pushing forward on not only like not getting comfortable with what we built, but pushing the feature set and performance of Jito, FireDancer, Agave, and other clients so that the network's just better for everyone and everyone makes more money.
I think that's great. I talk to a lot of other liquid funds and I talk about Jito to them. One pushback that I hear often is, about some of the supply unlocks and some of the investor supply. Could you guys maybe talk about how to think about that, or why, again, Tushar, you mentioned, look at it on FDV, and, I think, maybe valuation is pretty justified on it, just given the strength of the protocol. But like, how should people think about that supply unlock dynamic with Jito?
I have a few thoughts here. First, you have to look at, I think if you're looking at multiples based on FDV, you're already looking through the unlocks. You're assuming everything is unlocked, and you're basically taking the most quote unquote pessimistic view of the multiple by using the FDV, right? Like that is the worst the multiple you could be paying is using the FDV. You can do some adjustments to that to exclude tokens owned by the DAO, for example, just like you wouldn't necessarily include shares that are authorized but not issued at a company in their market cap. So you can think about some intellectually honest adjustments to that. But the most pessimistic multiple that you can calculate is by using FDV. The second thing I would say about unlocks is you have to understand who is unlocking. All market participants are not the same, I would say. And so understanding who are the market participants here, try to do the diligence to understand their motives, understand where they are in their fund lives, understand what is driving their decision making. For example, if you have a bunch of funds in an asset, and now I'm generalizing, I'm not talking about Jito in particular, I'm talking about how I think about unlocks generally. If you have a bunch of funds in an asset that have no DPI, and this is their one big winner, and they're about to hit the unlock, and it's a fund returner for them, they're probably going to sell or distribute, right? Like that's at the end of the day, the VC's job is to return capital back to their LPs. That's what they're going to do. But then if you are looking at a fund that maybe already has a ton of DPI or is really early in its life cycle and has DPI in its other funds, well, that fund is a lot less likely to go and sell something because they don't need to go and prove DPI to their LPs. You can also look at are the investors open-ended funds or closed-end funds, right? If it's a closed-end fund, that has some flexibility in that the GP gets to decide when to do a distribution. On an open-end fund, there's no end date, right? It's open-ended. So GP can underwrite holding it forever or for the foreseeable future without having to think about DPI in the traditional venture perspective. So I think, when you are an investor looking at unlocks, you have to go one step deeper. You have to do the work to understand who is unlocking and what do you think they're going to do, understand their motivations, drill down into it, how much do they own, and then you build your model of how the trading dynamics around this are going to play out. And honestly, if all else fails and you don't want to do all that work, just, average your transactions over time, right? Like that's also, that dollar cost average is like the easy way to mitigate the effect of unlocks. If you're worried that unlocks are going to deliver selling pressure and drive down the price of any given token, but you are fundamentally bullish that token, dollar cost average, you'll end up buying more tokens when the price is lower because you're putting in the same amount of dollars. You'll end up buying fewer tokens when the price is higher. This is a very reasonable accumulation strategy if you are not opinionated about timing. If you're opinionated about timing because of some catalyst, then you should think about that a little bit differently.
That's a great point, actually. And while you mentioned catalysts, before we go into the closing thoughts, maybe could I hear from maybe both of you guys? What do you think are some of the catalysts for Jito? Lucas, maybe start with you, and then back to Tushar.
I think it's the Sol ETF is coming this year, and there's already been filings for Ethereum staking ETFs, and that's Solana staking ETF is something we think a lot about. There's a lot of advantages to using Jito Sol and these staked ETFs, or even doing 100% Jito Sol ETF, because I won't go too deep in the weeds here, but with the staked ETFs, you need some percentage of the assets to be unstaked so that you can fulfill the redemptions. And if you have something like a Jito Sol ETF, you could stake 100% of it, so you're earning double the yield. Staked Sol ETF would 100% be a better product than a non-staked version. So I think that's a matter of time and something we're looking a lot into.
Yeah, I have two things. The first one is what Lucas mentioned. I think there will be a staked Solana ETF. I don't know when, but I think it's coming. And right now, the way that staked ETFs are done in places like in the European markets where they do exist is that they stake a portion of the SOL that they have. And so the yield that they're earning is much lower. Like the blended yield is like 3% or something rather than 8%, because they have to have enough liquidity to meet intraday redemption requests. If you use a liquid staking token, you can stake all of the SOL that you have, because you can still sell that liquid staking token to meet intraday redemption requests. And thereby you can earn a better yield, and that will attract more capital, which obviously these ETF issuers want. So I think the most liquid LST is going to have the best chance of being adopted by the largest staked SOL ETFs. So that's number one. That's pretty near term. Number two, I think, is a longer term thing. And that is the adoption of tokenized securities. I believe with very high conviction, if you fast forward 10 years from now, almost all securities will be tokenized. The current antiquated transaction settlement and clearing infrastructure is a product of, the fax machine age, not the internet age. And we are clearly moving in the direction of tokenizing bonds, equities, derivatives, all of these things to be on more efficient rails. A lot of the largest issuers of these types of assets in the world are issuing things on Solana. For example, BlackRock recently issued their first fund on Solana. I think that was a couple of weeks ago that went live. So we are seeing these issuers show up to Solana, and the issuance of tokenized securities is going to increase the total addressable market for Solana by several orders of magnitude. If you think you've seen trading volume on chain so far, you haven't seen anything yet. You have to look at what trading volumes look like on real world productive assets. Meme coins are great and all, like, sure, look, people love trading that stuff. I don't personally trade any of it, but like, fine. But productive assets are worth a hell of a lot more than meme coins in aggregate. And they deliver way more trading volume. And so as we see these real world assets get issued on Solana and see these tokenized securities, I think that that increases the real economic value on Solana substantially. I think that a lot of the profits which currently go to high frequency trading shops for being the fastest will end up being redirected to the Solana stakers and validators and infrastructure like Jito, who get to decide which transactions get included and in what order. And so I think that is a major catalyst. It's going to take some time to play out. This is one of those sorts of compounding steady growth over long periods of time. I can't say that like, oh, it's going to happen in the next 6 months or something, right? Like it just takes a while. But I think if you zoom out 10 years, it feels completely uncontroversial to me to say that almost all assets will be tokenized by then.
Yeah, and presumably those tokenized assets, those transactions will be more mission critical, and they're all going to require the need for transaction inclusion and ordering services that Jito can provide. But I think this was great. I think it's time to move to closing thoughts. We can start with Tushar, then go to Lucas. Tushar, any final thoughts, major takeaways that you want to leave everyone with as it pertains to Jito?
My major takeaways are that if you are bullish on Solana as an L1, I think Jito is a major beneficiary of growth in the Solana ecosystem. I think Jito has created a ton of value for Solana through positive externalities from its infrastructure. I think it's delivered a lot of additional performance for the Solana network, and performance is what Solana is all about. Let's have the most efficient blockchain we possibly can. And I think Jito is an integral part of that. I think that Jito has some really powerful lock-in effects due to the virtuous cycle or the flywheel of some of the reinforcing natures of the various products that Jito offers that we discussed in depth earlier. And so I think that Jito has the potential to have a significant amount of revenue as Solana continues to grow. And I think that revenue is quite sustainable as opposed to, some other types of businesses where I get a lot more worried about margin sustainability in this perfectly competitive world. So overall, I think I'm very bullish on Solana. I'm very bullish on Jito as core critical infrastructure on Solana. And I'm very bullish on the future of crypto and more assets being traded on programmable rails.
That's great. Lucas?
Yeah, I would definitely echo all that. I think we think about Solana a lot and how to increase the performance of it. And there's been a lot of things that we've been working on and learning over the past few years that will come into fruition pretty soon that we're very excited about. I think it's going to unlock a lot of new features on Solana and really help make it so that people can launch these assets in the future and have a good user experience for everyone and just make Solana the best place to trade. So future is very bright for Solana and Jito.
I think that's a great place to end it. Thank you both for joining us today on Level Up.
Thanks, guys.
Thanks.
Thanks for having me.
That's a wrap for this episode of Level Up, where liquid token protocols meet the sharpest minds in institutional investing.
If you found value in today's conversation, don't forget to subscribe and share it with your network.
For more deep dives into blockchain's most compelling projects, reach out to us or follow the Medici Network for more insights. Until next time, keep leveling up.